Yo, what's good, everybody? In this video, I'm going to be going over how to preserve your capital, how to stay out of the markets when you don't see a setup, and how to, once again, keep your capital once you are in profit, whether if it's a personal account or a funded account, whatever you're trading on. I do recommend funded accounts. I'm trying to get a lot of you guys funded by the end of the year. We're going to make that happen. Setups haven't been very clean at all. The past week or two, we've had a couple good setups, but I mean, it's just been so much news, and that's why we have stayed out of the market. And that's what I'm going to go over today. So I'm just looking at the charts right now, trying to see a setup, but I'm not seeing anything. So I'm once again not placing any trades. For you to be in the market for countless hours a day is going to destroy you. Rule number one, only be in the market the hours of the session that you trade. Now, 95% of us trade indices, 95% of us trade NASDAQ, right? Only be in the market for New York session. And volume tends to slow down a lot after, I'd say, around 3:30 p.m. Eastern time. So once that time hits, get out of the market, all right? Because you don't want to be holding a trade into Asia. You could, if that's how you trade, do it. But me personally, I get out of the market at 12 p.m. Eastern time. So as you can see, it's almost 11. So I've got an hour left, right? The more you're in the market, the more you're looking for a setup, the more you're forcing a setup, right? The more vulnerable you're going to get to losing. You want to use the market to your advantage. You want to be in the market for as little as possible. Whether if it's half an hour, 2 hours. Don't be in the market for 5, 6, 7 hours a day. Be in the market for 1 to 2 hours, maybe 3, right? Maybe 3 hours. And then for 2 to 3 hours at night or whenever you have the free time, backtest. That's really it. If you do 5 hours a day on the charts, well, if it's live and backtesting, studying, the course, get those hours in, because the more experience you have in the market, the more you're gonna be confident, the more you're gonna win, the more you're gonna be like, oh, okay, I took a loss, whatever, I'll be back tomorrow, I'll look for another setup, and that's that. You won't let losses get to you, right? So say you're not profitable and you take a loss on a challenge and you're like, ah, damn, like next trade's gonna lose, like I'm not feeling confident, you hesitate to get into the setup and then it goes your way and you get even more, messed up in the head. It's all a continuous cycle. So for us to preserve our capital and for us to stay out of the markets as much as we can, look for the 2 setup entries that we go over on a daily basis, right? Now, if it's a reversal pattern, change character, right? Look for the low to get swept and then the high to get swept. If it's demand, if it's supply, wait for the high to get swept and then the low to get swept. Now, if it's a continuation setup, you guys know, obviously, right? Look for the demand or supply to form and then look for liquidity and our other confluences to line up with it to make it as high profitable as possible. I can't even speak right now. So if you do not see those 2 setups, either one of them, right? Why are you in the market? Why are you looking for a trade? Why are you forcing a trade? Those forced trades that you're taking is only gonna induce losses, right? So there's no point. Stay out of the market as much as you can and only get into the market when you see a high probable setup. Simple as that. You have to really train your mind in this field work, in whatever we want to call this industry. this job. Treat this shit like a business, right? You don't want to blow your entire business in one deal. You don't want to blow your entire account in one trade. You know what I mean? The losses that we take are business expenses, right? We take a loss, we give money out so we could get money in return. It's simple. You don't want your losses to ever be bigger than your wins. That will really take you far in trading, and the risk to reward that I really try to nail down in your guys' head, that's going to take you beyond the limits that you see yourself at. Stay out of the markets. Only look for the high probable setups. If you don't see them, get out of the market and continue on with your day. You're not going to make money every day. You're not going to find perfect setups every day, right? So until you do, stay out of the market. As simple as that. Don't force trades. Let them come to you. That will not only preserve your capital, but that will also keep your psychology in lock. Alright, so that's it. Short little video for you guys today, going over, risk management, staying out of the markets, how to not be vulnerable in the market, and just really, if you take a loss, it's all part of the game. Don't take them to heart, just like don't take wins to heart. A losing streak, a winning streak is not going to continue forever. That streak will break sooner or later. Just remember that. So that's it. I hope you guys enjoyed this. Once again, look for the high probable setups. Stay out of the market until you see that setup. Don't force any trades, and stick to your plan, and most importantly, stick to risk management. I'll see you guys in the next video, and I'm out.